Hey guys, be twice here. Today is Saturday, July 17th. Hopefully everybody's having a good weekend. We're going to be taking a look at wave theory on PLTR and then the EV gang. So we're going to start with PLTR. So PLTR, I had rode this guy up to about 27 a share, and then obviously we hit a wave one peak, and now we're on the backslide down. So where is this thing going? So I did a video early in the week where I was actually seeing this whole structure right here as an impulse, um, and then I thought we were going to get close to a 50% retracement, taking us back up to the 25 range. And now, mind you, now that I'm looking at this, it's become obvious to me that I think my count was wrong. I think that what we saw was we had a 5-wave move down for an A here, popped up for a B. Then we had a 5-wave move down for a C, which ultimately was a W. Um, and then so either that was going to be bottom, or we are going to correct a little bit to the upside and then come and then ultimately get rejected and go lower. A lot of times these moves, whether it is for a B or for an X, you do usually retrace about 50% or so of the last drop. Now, with wave theory, there's one thing that pretty much any book is going to tell you: it's never bet against the trend. And the reason behind that is when you're going against the trend, it's not as predictable as going with the trend. So this was with the trend, very predictable. It's an impulsive structure. You can bet on it going up, and usually you're going to be right. Your probability of being correct and making a gain on that trade is pretty high. When you're in a downtrend, like we are, so we've topped for our wave one. Now the trend has become a downtrend. The only thing you'd want to do in this downtrend, if you're hell bent on trading it, is shorting it. So mind you, we're in a larger uptrend, right? Because this was a one, so obviously we're going to pull back for a two. We're going to have a corrective sequence down, and then ultimately we're going to be rallying for a three. So primarily we're going to be in an uptrend. So like if you were hell bent on buying the primary trend, you'd want to buy leaps or shares on this on the backslide, looking for long-term position. But if you're looking at a short-term gain, you would never want to buy like calls, betting on it to go up, unless you're really risking. And the reason behind that is because it's not guaranteed how high it's going to go, right? I thought this was going to pop back up to like 25, but ultimately the market started to slide, and it only went back up to this 23 range because it was only doing a retracement of this prior move. So it wasn't going to go the whole way up. It was only going to go half the way up, and that's why on this backslide, because we're in a primary uptrend, the only trade that I'll take is buying shares on the dip. I won't be buying calls, because it's not worth it unless I was going to buy leaps, and I was very, very sure that this was the bottom. The problem was that the 61.8% retracement is $20 a share. So that's the highest probability area for us to find true bottom. So there's no way I'm buying call options on this guy until we get to at least 20, if not a little bit lower. So with that being said, I've been collecting shares on this downside, and where do I see it going? Based on the state of the market, yeah, we could still have another little pop up, but ultimately I think we're going to head lower. And this is the highest probability area for our wave two. Is going to end up being, so what you do is you do an extension off of W from X, and it's going to be somewhere around the 61.8 to the 100%. So I think the highest probability for us to find bottom is going to be $20 a share. At that spot, we're going to be looking for a rally up for a wave one and a pullback for two, and that's where you buy calls. You buy calls on your pullback for two, because then you have a higher probability trade. There's way less downside, and then if you catch that wave three, there's going to be a massive rally. Ultimately, I do still see us finding bottom somewhere in here, so I would be buying shares on the dip, and collecting them for long term, because from there the price target's $38 a share. Now, this is another reason down here looking at RSI of why I see some more downside coming. So it's a good sign though. The good sign is that we're actually seeing bullish divergence. So as we're making new lows, the RSI is making higher lows. So that's bullish divergence. But look what we're going to see. We're likely going to pull back to retest that uptrend of the RSI, and that's this red line, and then from there I see us rallying off this green line. So we're going to be watching RSI on here, because if you really, really wanted to buy calls, this is the spot to do it. If you were trying to do short-term calls, is when you go back and you touch that RSI trend line, because at that point you can almost guarantee you're going to get some kind of pop within a couple days. And if you play short-term weeklies or something, you might be able just to sell on the pop to the upside. So you want to watch this RSI and make sure you're using that to your advantage. Okay, NIO. So I've been saying that I do still see more downside NIO. My spot that I like the best, for us to find bottom is right around 40 a share, but ultimately with the state of the market, it could go as low as 35. So I do still see more downside in NIO. Same thing with PLTR. I'm not collecting call options at this level. I think that's a fool's game. Um, I've been collecting shares, and because I see more downside and I favor more downside, what I've been doing is I've been scooping up NIO shares and I've been hedging those shares with puts so that if we do go down to between 40 to 35, that I've stopped a good amount of my loss by collecting the money off the puts. So with that being said, I am hedged, but I am starting to accumulate NIO for my long-term portfolio. So same thing with PLTR. Look what we're seeing on the RSI, right? You see this? This is why you want to use the RSI. It is your friend. If you were hell-bent on buying call options on NIO, you'd want to wait till this comes back down and touches the RSI. Because like look, basically every time it touches it and pops it back up a little bit, you can at least get a pop to the upside. But ultimately, what I do think is going to happen is we'll get one last flush. We'll hit the RSI and then we'll rally. And I'm thinking that one last flush takes us down to 40 a share. But depending on the state of the market, we could go down, touch it again, ultimately rally up just to fail again and come back and test it again. So there could be multiple tests of this RSI trend before we truly launch. Um, but with that being said, I will be accumulating shares on these downslides. I just want to make sure that I'm hedged appropriately. So I do still see us having our bottom somewhere between 40 and 35 a share, and then ultimately from there we're going to rip. And I think NIO's a couple $100 stock in the future, at least 100 plus within the next few years. So that's why I've been trying to accumulate on this downtrend. All right, CCIV. CCIV, same thing with the RSI is what we're seeing. We're looking for a wave two bottom. We're already pretty low. If we cross this line that I have as an alert, my count is invalid, and I'd have to go back to the drawing board of what I'm seeing. I'm in CCIV for the long term, similar to NIO, so I don't know if I would sell even if we do cross below this, especially because soon they're going to be having their ticker change. We all know what happens during ticker changes. They bleed out because there's not a lot of volume, and shorts can manipulate the hell out of it, and a lot of people are selling it. So with that being said, we could go below invalidation. I'll have to keep watching it. If we do go below invalidation, that you definitely want to lessen your position just because when the wave count's wrong, that means that this $4 price target is wrong. I still think the $4 price target is good. We just need to hold this level and hope that the market doesn't completely die here in these upcoming weeks. Because if it does, it probably will break this. And if the market goes into a complete correction, then we could go lower than the low at 17. So I still like CCIV. I'm long in it, but I'm making sure that I'm only in shares and or warrants. I do not have call options because this one is could take a long time to develop. All right, let's look at Tesla. So I'm still long Tesla. There's two different things we're going to look at. We're going to look at the bear and bull. I went back and was looking at the count because we keep getting rejected at this downtrend line. We've gotten rejected at it longer than I expected to, but the good thing is it appears that we're starting to we're kind of flagging a little bit over here. We keep catching this support and then rallying back up and then testing the downtrend line and coming back down. I think we're going to break above it the next time we test it. And I think it's going to be this week. I actually think it's going to be early this week. At the beginning of the day on Friday, we saw strength out test and we popped up and we pulled back. Ultimately, I think that was a wave one and a two, and we're going to be in a wave three, and I think it's going to break right through here. After it breaks through it, we're going to back test a little bit, and ultimately we're going to be rallying up. And what I'm seeing is that before I was thinking that this was a nest, it was a 1-2 nest, and that we were going to be seeing 800s in a very, very short period of time. Given the fact that we have not been able to break above this trend line and hold it, I've changed my count, and we're in a wave one, so it is valid that a four can cross your wave one territory. So what I'm actually seeing is that we've actually pulled up for a one, pulled back for a two, we've popped up for a three, and we pulled back for a four. And from here, we're going to rally up for five. So for wave five, I ultimately do see us up in the, above 750 somewhere, and that's going to be our wave one. And this has to do with the state of the market. I think the S&P 500 and the Nasdaq are coming close to a top. I don't think they've topped yet, which a lot of people probably do. I think we're going to have one last rally to all-time highs, and then up there we're going to see a blow-off top. Now, what I see from Tesla is that we're going up for a wave one, and then that's when we're going to correct, is when the market's correcting. So I think this week we're going to break above this trend line, and I think ultimately we're going to be going up into somewhere 720 plus. It may not get all the way up to the 750, but somewhere 720 plus. We'll have a pullback, and then I think we'll have another rally around earnings, which is going to take us up to just below 800. I don't know at this point if we'll be able to cross 800 just yet. I do think all-time highs are in the near future for Tesla, but I think we're going to be working on this wave one. The wave one's going to be lower than what I expected before. And ultimately, we're going to be pulling back for our wave two. And the wave two is going to take us back down by this this downtrend line. I think we'll hold it. So the bulls want to see this rally up towards 800, and then when the market tops, we're going to have a pullback taking us back down into the 600 range if we have a serious correction, and then ultimately we're going to be rallying to all-time highs from there. Now the bear count is still valid, and that's what I want to talk about. So what the bears are seeing is that that this down here was only a wave one, and that this was a two, and now we're in the process of working on a 1, 2, 3, 4, 5 move to the downside for a wave three, and then we're going to have a 4 and a 5. And if we do have that impulse to the downside, the bears are saying that this top is in and it was a wave two. It was an impulse to the downside wave two, and then ultimately we're going towards the $400 to $500 range. If you're super long at Tesla, it does make sense to have hedge in this name because both counts are very valid. I'm favoring the bull count because of strength that we saw in Tesla in recent weeks. Back here when it was extremely weak in comparison to the indices, I was favoring this bear count. When we broke out of this triangle and really are testing this downtrend line, I flipped and was like, you know what? I'm actually favoring the bull side of it, and especially the data that started coming out about Tesla. And there was a lot of positive things coming out. So because of that, that's where I said, you know what? I do see us going up into this 800 range, and not ultimately going down all the way to 4 or 500. But it is still very valid, so you want to be mindful of that. So, all right, guys. If you like these videos, go ahead and hit like and subscribe.